Conor O'Brien, CEO of O-Shares Investments. With me today, Kevin O'Leary, to talk about small caps. How are you, Kevin?
Good. Great to be here. Thank you.
Great. So small caps, often talked about, not often a big allocation for a lot of people. What are your thoughts as people kind of reconsider, reposition for slower growth as they head into 2020? What's the role of small caps, and how do you suggest people think about small caps now?
You know, small caps are a relatively new addition to my portfolio. I'll tell you why. The classic granddaddy index for small caps is the Russell 2000. The problem with the Russell 2000 is about 2/3 of the companies inside of it make practically nothing in terms of return on assets and do not make money. They're not profitable. So I have no interest in owning those companies, not now, not ever. And so the only way to approach small caps is to index for profitability, index for distributions, index for strength of balance sheet. And that's what I'm interested in. So about 1/3 of those companies, and they're more of the larger small cap, in other words, a minimum sort of 5 billion market cap. And the advantage of finding some of those and putting them into your portfolio is that, generally speaking, small caps in the US market are not exposed to currency fluctuation because they're doing most of their business domestically. That's number one. And that's a problem for large caps these days because the American dollar is so strong. And it goes through the FX cycle, the currency cycle. And so you've heard complaints from large caps about the exchange rates and the American dollar hurting their earnings, but that doesn't happen in small caps. So that's number one. Number two, small caps tend overall to grow slightly faster than large cap indices. And so you know, balancing some of those into a portfolio long-term is not a bad idea. And so that's what I use. I use an index that sort of sifts through the Russell 2000 for the companies that make money, that provide distribution, that have strong balance sheets, that are growing dividends without using debt, and I put them into the portfolio. And that has worked for me.
That's fantastic. I'm going to show people a couple of charts here on why consider small caps now. The first, this just chart shows a long-term history of relative valuation. Small caps now are about the cheapest they've been in 20 years relative to large caps, a very substantial discount. We skip ahead to the next chart, just show people how this OUSMX index works. And you were describing quality metrics, Kevin, the kind of companies that have the strong balance sheets, the strong profitability. And when you set index rules to select for those criteria, you end up with an OUSMX index that has a performance history relative to the Russell 2000 value that shows the OUSMX index winning when it matters the most. So when performance is weak or average all the time in this chart, the scatter chart, OUSMX outperforms. And in fact, it outperforms even when the market is doing really well for small caps. So it's really important for people to think small caps are risky. You don't want to take the risk. You can actually take out the risk to a certain extent, a large extent, by getting rid of the stocks that have unprofitable businesses, highly diluted balance sheets, and those other characteristics Kevin referred to. One more chart here just shows you the downside protection you get during these annual events that happen every year, that there's a weak period for that takes the market down a little bit or a lot. And the OUSMX index helps avoid about 30% of the downside during those stress events. So performance when the market's performing and less downside when the market has a stress event. Kevin, tell us just briefly, how do you have your allocation set for this strategy, OUSMX, going into 2023?
It's 20% of my portfolio. So basically, if large caps are 40, this is 20, and that they're all domestic. So it's 60% domestic equities, and they're all high quality. Obviously, I'm looking for slightly higher growth and getting it in mid cap and small caps here. But 20% seems to be a good balance. When in decades before, I never had any. This is a really good way to play the Russell 2000 without exposing yourself to companies that don't make money.
Great. I really appreciate that, Kevin. Thank you, everybody, for joining us today. And for more information, please just send us an email, info@oshares.com, or go to our website, oshares.com. Thank you.